Hi guys, how you guys doing? Audio's fixed, guys. Welcome on over. Money Mitch is here, guys. We're gonna go ahead and get you guys on over to All Access. Spencer should be joining right now, and then we'll get you guys on over. I apologize for that audio issues. We want you guys to be able to hear this, of course. So we're gonna go ahead and just go on Plan B. We're on this stream now, so I want you guys to stick around. We're gonna get into these companies and also take a look at the market. So I hope you guys can be hearing me now. Everything should be good. Give me a big thumbs up in the chat if you guys are ready. Of course, hit that like down below. We're going to be getting into MySize. I know they just presented, but maybe we'll bring them back. I'm going to go ahead and stick around with you guys until we can go ahead and get this rolling. So I hope you guys are sticking around with us. We're able to make it through those battles and stuck around towards the redirect. I know that it's been a rough morning, rough start. We're always usually prepared. Today we dropped the ball. And one thing that I'll tell you guys is we will be back at it and always we bounce back, always trying to find the better way. So one thing that we definitely will do is find the better way to improve on this mistake. And it happens, guys. You know, one of the things is running technical issues all around different kind of platforms. Sometimes we're going to run into some issues, but we are getting here and we are ready to get at this market. I know I'm trading over here live right now and watching this show. So I hope you guys are enjoying it and giving me a thumbs up. That's what I like to see in the chat. Looks like everybody's getting on over. Looks like I got Spencer joining me. He should be fixing up his.
Yeah, wait. Can you hear me, Mitch? Can you hear me?
Audio's good. No choppy. And I got you, man.
Oh, boy. Okay. Hey, it's one of those mornings. Holy cow.
What they say, right?
What
Urgency is the ante to play, baby. Let's go. Let's go. We got this. Spencer is on here.
Oh,
Spencer, can you do me a favor? Just start up like it's brand new right here. Ready? I'm going to give you the 3, 2, 1. Take over, Spencer.
I'm just kidding. What's up, everyone? All right. So here's what we're going to do. I am working on getting the new links over to all of our guests right now. It's a team effort behind the scenes. All sorts of stuff is happening. Messages are flying left and right. But I appreciate you all for bearing with me. Thank you, Happy, Cherno, Elliot, Zen Bullish, Nina. Man, one of those mornings. What can I say? All right. We are finding a better way. We are powering through. In the spirit of starting over, let me just say, once I'll give you my same spiel again, because I think a lot of you may have missed it. So welcome to All Access, the show where we go behind the chart, behind the ticker, and tell the story of companies from the people that know them most: founders, CEOs, executives. So we just heard from MySize. I'm going to bring on Dr. Michael Lebby from Lightwave Logic here in a few moments. But we have a number of conversations lined up for the duration of the show. We're going to hear from Lightwave Logic, Fortress Biotech, SurgePays, Jupiter Wellness, who's merging, Todos Medical. And we're going to spend a few minutes with each of these executives and just talk to them about the story, right? Catalysts. Where has the company been? Where is it now? Where is it going? The thing I tell all of them is sell us on your company, on your business, right? We're not going to get into the stock and you know, is it up, is it down? Because I'm not interested in that for the purposes of this show. I'm interested in the story. Okay, that's the bottom line. So, how are we doing? You know what would be funny if this video got way more likes than the last video. That'd be awesome. So, let's hit that like button, everyone. This is All Access. And then I do have to mention again that this show is sponsored, right? It is a paid show. It's why it's demonetized on YouTube. It's why it's indicated that it's a paid show on YouTube. And the companies that are appearing on our show today, on every All Access show, the companies that are appearing have paid to be here. But there is a key but here. The but is they do not know what we're going to talk about. I mean, they think they have some idea. They're going to tell the story of their company, but like, they don't know the questions I'm going to ask them, because I don't even know the questions I'm going to ask them. I don't write questions down ahead of time. I write notes down, and then I have my notes, but it's like having a conversation. You see where it takes you. It goes in any direction. You follow that direction. So they don't know what I'm going to ask them. They also don't know what you're going to ask them, right? If you have a question for any of these guests upcoming, Lightwave Logic, Fortress Biotech, SurgePays, Jupiter, Todos, drop your questions in the chat, please. I will save time at the end of every segment for Q&A. I promise. And if there are no Q&A, if there's no questions, then I'll just keep going. So that's the caveat here. They've paid to be here, but they don't know what we're going to talk about. So that's step one. Step two is I have to thank our premier sponsor of this show, which is Ticker, TIICKER / Benzinga. I'm going to put the link up on the screen right now, and I'll put it in the chat too. Let me find it real fast. Let's go here. TIICKER / Benzinga or ticker.com / Benzinga. Hey, click on that link, all right? It's in the description, or it should be. Click on that link, create an account, open your brokerage or connect your brokerage. Tell them there's a little box when you confirm your email. Tell them you're from Benzinga, and they will send you an Amazon gift card. Just like that. $25 gift card. Just sign up, connect your brokerage, confirm your email. All right. Enough of me. We're running a few minutes behind schedule, but not that far behind. So let's keep on rolling here. I'm going to bring on Dr. Michael Lebby, who is here with me now. Thankfully, he got my email. He got someone's email. He's the CEO of Lightwave Logic. Let's get him on the show right now. Dr. Lebby, welcome to All Access.
Good to see you again, Spencer.
Hey, I just saw you a few moments ago, and now here we are again. Funny how that works out. So I'm glad you got my email. I'm glad you're here now. Tell us about Lightwave Logic. Tell us about the business, the company.
I will. I just had a computer crash. I've had problems like you when we switched.
It's not just me.
So that's why you see a different background. So the nice virtual background of Lightwave Logic is gone for the minute. But anyway, Lightwave Logic, yeah, this is really exciting. This is one of the most exciting times of my life. We're doing technology that's really going to change the internet. We're speeding up the data rates that go through the internet, and we've got a technology platform that lowers the power. And as we all know, telecoms and datacoms and data centers all are trying to figure out how to lower their power consumption. So at the very highest level, that's what we're doing.
So what's the business there? What's the business model?
So the business model is that Lightwave Logic is a company that has developed and optimized electro-optic polymers. Sounds really complicated, but
you're gonna have to dumb that down for me a little bit.
Polymers, right? I mean, when we look at the TV screen, when we look at our computers, mobile phones, we're looking at polymer displays, right? No, they're organic LEDs, and that's sort of different than what we're doing because those are polymers that push out light, red, green, blue, so we can look in displays. The polymers we make actually switch light very, very quickly. So you apply electric voltage or electric field, like just from a battery, and you can switch light fast. So what can you do with that? And what you can do with it is, if you think about the fiber optic networks that take all our internet signals and our video signals like we're doing today, you want to have faster data rates. You want to have more bandwidth. You know, we've all suffered these technical problems at home, you know, freezing screens. Our technology switches light faster, which means you can send the light quicker and you get more bandwidth.
So then the obvious question for me is, like, why has this not been done yet? Why are you doing it? Like, how has it not happened already?
So yeah, it's a good question. So the internet is full of optical devices called modulators. So these are devices that switch light. Today's technology uses semiconductors. So if you look across the optical networks and the internet, you see semiconductor-based modulators. And as you're probably experiencing, these have limitations in speed and power. What we have is much faster, much lower power.
Okay. Normally I do like saving questions from the chat until the end, but in this case I'm going to break my rule because there's a question here from the chat. I'm not going to say your name in the chat, but I'm going to read your question. You've been super consistent on your revenue language for the last 3 years, that you have internal models but aren't ready to share them. He wants to know, or he or she wants to know, is this the year that changes?
So that person's probably asked similar questions over the last 2 or 3 years. Yes, we have internal models, and you know, probably later in the show we'll get into the business model, but we haven't provided guidance as of yet. And, we still haven't provided that guidance. And so, as the year progresses, we'll see what happens.
All right. Now there's a few more coming in. So I will save some more time for chat questions, but I want to get to a few more on my end. So, okay, you haven't provided guidance on that yet. I think a lot of people probably want to know though, like when can we expect to hear something, right? Can you give us any? You don't have to give guidance now, but like timelines on when we can expect new developments, new announcements.
So, we're progressing along that route. We, as you probably can guess from some of these questions coming in on chat, are reasonably conservative. We made some big announcements last year. We're working with silicon foundries so that we can scale the technology. But, both Jim and I, Jim is the president of the company, we're working those issues. And, the best answer I can give you right now is that we're expecting a really great year. So we're really excited as we move into 2022.
There are some in-depth questions in the chat. I want to give our chat some credit right now for dropping some questions in here. Let's go to this one actually from Paul. He's clearly a follower of the company, and he's citing a recent press release of yours where you mentioned breakthrough photo stability. He's asking if you can quantify the stress conditions of that, including temperature, duration, etc.
So we did put a press release out on the 10th of February, which was yesterday, and we did talk about breakthrough photo stability. And if you go back into this field of organic materials, one of the questions customers always ask, in fact, anybody really asks, is what's your photo stability of the material? This is a measure of robustness. And so if you can stabilize your material more, and photo means light, so you can stabilize it more for light, then you have a much more robust material, both for working into devices as modulators as well as working with foundries. And this is what everybody wants to see. I mean, if you, just as a comparison, if you go back to organic LED displays back in the 1990s when I worked on them, back doing R&D in Motorola, nothing was stable. You couldn't get the blue to be stable. The lifetime was only a few hours. And then you fast forward to today and everybody's using these organic LEDs everywhere. So stability is always a key. We already have great stability, but if you can improve it even more, then you have a much more robust technology platform.
Okay, here's a question from the chat that actually was also in my notes here. You may have already answered it, but maybe you didn't. What is the biggest barrier right now to your technology? And actually, I'm going to ask you two questions in one. What is the biggest barrier, and then what is the most common question? This may have been what you just said, but maybe it's different. What is the most common question that you get from potential customers?
So I don't think of our technology having major barriers. I think what we have is we have a really great tailwind pushing us towards silicon foundries. And as you know, these are big fabrication plants that scale lots of wafers. And so one of the things that we came out with last year is that we have a little small fab at our facilities in Denver, Colorado. That's 1,500 square feet. But that doesn't compare to some of the bigger places you see dotted around the world. And so if you want to get scale of your technology, you've got to get it into a bigger fabrication plant. So whether you want to call that a barrier or not, we're working with what is called the PDKs, the process development kits. And so making sure our technology seamlessly goes into these big places so you can scale in volume. Now, the second part of your question was, what do I get asked all the time? I get asked all sorts of questions from customers and investors all the time. But I think, this press release that came out yesterday is actually more important than it probably reads on the surface. Stability, when you're talking about non-semiconductor type materials like organic materials, like what we have, electro-optic polymers, one question always asked is, is the material stable? What's the temperature range? These sort of things. And I think that gets that gets asked a lot, and that's why I believe yesterday's press release was really important. And anything that sort of points to a more robust technology platform is always great. And so I'm putting my techie cap on right now, and I think that's a good answer to your question.
What other hurdles are you facing as far as foundry integration?
Well, I mean, when you work with foundries have timelines, foundries have cycle times, and so we're working within the foundry cycle times and their roadmaps, and so that takes time. These things don't happen overnight, as you know. In the IC business, it's no different than the IC business, except we have a technology that is additive to silicon photonics. So you have to work with the normal foundry cycle. I don't think that's a barrier. I think we're just working through it.
And then the obvious question here that jumps out to me is like, just like I asked our last guest about how global supply chain shortages are impacting his business, I feel like I should ask you the same question. There's a global shortage of semiconductors. How does that play into your hand at all?
Yes, I'm aware of some of the global supply chain issues, but let's just think about who we are. We're an organic materials company. So in our facilities in Englewood, just south of Denver, we have our own chemistry facilities where we generate our own material. So we really don't suffer any supply chain issues from the development of our own chromophores and polymers that go into the modulators. And so we haven't seen any effect of the global supply chain with us so far.
That's what I was getting at. I had a feeling you were going to say that. Awesome. Again, we're on with Michael Lebby is the CEO of Lightwave Logic. Man, I would ask the chat for questions, but they're flying in here. So let's go to a few more of these. From Chris, how are the limitations to testing progressing currently?
We have great testing capabilities. In fact, we have state-of-the-art testing capabilities. Now, if you think about some of the optical devices that go on the internet today, run, let's call it 35 to 40 gigahertz. Our testing capability measures all the way up to 110 gigahertz. So we have great testing capability. And what that really means is that we can test faster devices that are already out there today. So we can characterize them, we can get all their parameters. And so we're very comfortable from the testing standpoint.
All right. Harry is very fired up in the chat. You may have already touched on, we already kind of touched on this a little bit, but I know you can't get too specific. Harry wants to know, hey, full stop. Will a commercial agreement happen this year? I don't know if you can get that specific.
I cannot get that specific, but what I can do is I can sort of give some indications. We, in a press release that came out a couple of weeks ago, we just hired a industry veteran as a VP of engineering. And I'm extremely technical. I'm still involved in deep technical issues, but now I'm working with Dr. John Ziskind. And that gives me a little bit more time, as a person who's leading the company to think about on the business side of things. So while I can't answer the question, what you are seeing is that we're scaling the company, we're bringing the right level of resources so that we can do the job properly.
What about that sales, that deal pipeline, that sales pipeline? Can you speak to that a little bit?
Yeah, no, we are seeing a lot of interest in technologies that double and triple the data rates and lower the power. And so, yes, we're getting a lot of feedback from the customer base. This is really exciting. And so, I think that the challenge that everybody's asking on the chat is like, when are we going to turn this into something that we can announce? But certainly internally, we haven't provided any guidance, but we're certainly very active and we're really excited.
Man, I do have to say, this is one of the most fired up segments I've seen our chat fired up for in quite some time on this show. Hey, everyone, while you're here, if you want to hit that like button, I'd appreciate that. We're on with Michael Lebby, the CEO of Lightwave Logic. What can you say going forward just about what is the next catalyst?
Well, we in the about in May last year in the annual shareholder meeting, we gave some goals. I usually give out yearly goals. I'm going to be updating those goals in May this year, our annual shareholder meeting. I think this year, I mean, the big thing is foundries. I mean, these are the mechanisms to get to scale. You can't do it yourself in a small foundry, but folks that have already invested the billions of dollars and take your technology, run with it. And this is how you want to get the technology everywhere. And quite frankly, fast optical switching that's really low power. I mean, I'm really just talking about fiber-based opportunities, fiber optic communications. But you have to think about this for a second. We're a small company, but there are opportunities that are non-fiber based. They're, free space. Whether you would look at that and call that automotive LiDAR, or 3D structured sensing, things in those fields where you don't need the fiber, you still need to switch light quickly. So while we're focused on the techie communication space, we have a platform that switches light very, very quickly, and it can be applied to other market verticals. So I would say there's some really exciting times ahead.
Yeah, I understand how that could be applied, but how far out is that application right now?
That is something that we haven't provided any guidance on, but as you can see in some of these fields, a lot of my colleagues have gone from the fiber industry into sensing and automotive displays. And so you're seeing techies that really understand how to switch light into these fields. And I think you're seeing a lot of activity, and certainly, the requirements to switch light is there.
All right. Dr. Michael Lebby, the CEO of Lightwave Logic, thank you so much for bearing with us this morning as we fought through gremlins. And you also fought through some gremlins of your own, powered through the chat. A lot of good questions coming from the chat. I'm not going to ask all of them. I frankly can't ask all of them. And I'm not going to ask super hyper specific minutia questions because wait, you did just give a date for that meeting, or no, you said in May. You didn't give a date though, right?
Correct. Yeah, we usually have our shareholder meeting in May.
Okay, so that's to whoever quad in the chat, whenever they announce it, I assume that'll be it. But I assume if Michael knew what the date would be, he would tell us right now. But I feel like you've got May, and then you'll get more specific from there. So, Dr. Lebby, thank you so much for coming on All Access today. It was a pleasure to chat as always.
Thank you very much. Enjoyed it, Spencer.
All right. I am feeling rejuvenated because I'm seeing our other guests, cycle into our new stream. So I want to bring on our next speaker right now, if I can. I see him. I see him backstage right now. We're our next guest is I don't want to overhype him too much, but he's got a name for himself. Let's put it this way: he's got a Wikipedia page. Okay, if you have a Wikipedia page, that means you're notable. Lindsay Rosenwald is the chairman, the president, and the CEO of Fortress Biotech. I'm going to bring Lindsay on right now. Lindsay.
Good morning, Spencer. How are you?
Have you read? Let's start with this. Have you read your own Wikipedia page?
I didn't know I had one, so now I got to take a look. Maybe I looked at it a long time ago. I'm too busy building a business to look at it. So I might have looked at it years ago. I hope it's up to date. Now I'll have to check
it. Fair enough. All right. Fortress Biotech, what are you working on? What space do you play in?
Sure. So we're in life sciences, biotech, and pharmaceuticals. It's a very risky business. I'm not a big risk taker, frankly. So we have a different kind of business model. We're drug developers and we're also drug marketers, but we try to lower the risk by having many product opportunities. So we have about 30 different programs, and our partner companies actually develop the drugs. We get significant equity in each of those companies. We get equity dividends in many of them, and we get royalties. So it's an interesting business model.
Can you just speak to your background for a second? I mean, I mentioned the Wikipedia page. You have a name in the life sciences industry. Give us you don't have to go crazy in depth, but I think you don't want to. But give us a quick rundown of your career and sort of what brought you here.
Sure. So, I went to medical school, and that was not something I enjoyed. I was a finance and economics major in college, and my parents sort of, be a doctor or we'll kill ourselves.
Yeah.
So I liked my parents, so I did go to med school, and then I dropped out of a very good fellowship at the University of Maryland when I realized I didn't want to practice medicine. I came up to Wall Street as a sell-side biotech analyst, and pretty quickly realized I was really an entrepreneur, and I would rather buy product opportunities, start new companies, and do that kind of stuff. And so that's what I've done for years. It's been, pretty successful. I've got a number of drugs to the market. I don't know if you ever heard of Zytiga. That's was a $4 billion prostate cancer drug that I sold to Johnson & Johnson. We've had a lot of success historically. I retired for a while from that part of the business, and then the fortress opportunity showed itself. A lot of my friends who were investors had become CEOs. They all said it's much better than being an investor. Instead of beating up CEOs all day, you can beat yourself up. And so that's why I did it.
Well, all right. I'll just say that as a graduate myself of the University of Maryland, I won't hold it against you that you decided to drop out. You decided to drop out. But all right, let's get back to Fortress. I have a couple of slides here. This first one just has your pipeline on it. Can you just walk us through the pipeline here?
Sure. So it goes from commercial through late clinical, early clinical, preclinical. So first, commercial, we got very lucky. There was a very successful dermatology company called Medicis Pharmaceuticals that was acquired by Bausch Health a few years ago for about $2.6 billion. We were able to pick up the commercial team, the guys and gals that really ran the company, and we set up a partner company called Journey Medical, which we own about half of. And on a relatively small investment, we built it up to last year, we did $44 million in revenue. This year, through the first 3 quarters, we did $45 million in revenue. So it's growing nicely. And it's just picking up a lot of interesting, already approved dermatology compounds, already approved drugs that are either not being marketed or not being marketed well by who owns them. And we just buy them on a accretive basis and market them. And we're also adding late stage development pipeline now too. So we're real excited about our commercial business. Late clinical, again, I try to lower risk 2 ways. One, we really try to buy drugs that largely are already in human clinical trials, and there's enough data out there that we believe and our expert advisors believe probably will work in larger trials. That's the focus of what we do. So that's why we have so many late stage clinical programs when companies are in our market cap usually don't have any, or they'll have one.
But how do you quantify all that though? Like I guess what makes a program attractive?
Sure. So I'll give you an example. So if you go to CAEL 101, this is a drug that we found in a university here in the States. It's hard to find these drugs because if they're in humans and they really look good, usually there's going to be a giant drug company that bids for it. We can't compete with them. So we have a very large business development team. And what we do is we look where other people don't look. We try to get there first and then move fast. So this is a great example. This was a drug that was in a 10-patient, first-in-man, phase 1 clinical trial for a fatal disease called cardiac amyloidosis. One of my business development people found it and came to see me right away and said, it's hard to believe, but all 10 patients seem to be benefiting from this drug with one injection. It's an antibody. So immediately I called the head of the licensing department at that university. They weren't even all that familiar with it because it was fully funded by the U.S. government, the National Cancer Institute. Anyway, we ended up buying it for about $200,000. We just sold it to AstraZeneca. They paid us, us being Fortress. We had some investors in it. Total upfront was $150 million, and a back end that could bring it to $500 million. Fortress receives 42% of that capital, of that purchase price. And again, our investment, as I recall, don't hold me to it, was about $200,000. So it's a very inefficient market if you can find them, and we find them. as you
All
can
right.
see.
So forgive my ignorance here, but you can just call someone up, be like, "Hey, I want to buy this," and then they'll sell it to you.
I can.
I didn't think it was that easy.
Can't. I can.
Oh, I can't. I understand.
Because I've done it, thank God, many times, and
All right.
you might love me or hate me, but I do get the job done, generally.
Fair enough. That's fair. I guess it would make sense that you can do that and I cannot. So I'm gonna bring that slide back up here. Is there anything else specific? Because you mentioned the CAL 101, that the purple right there. But is there anything else on this slide that you think bears or warrants specific attention right now?
Sure. So very quickly, the second one down there, Cosabelimab, is very newsworthy today, actually. I'm sure anybody who follows the life sciences saw yesterday the FDA dinged Eli Lilly for trying to take what's a very hot area in biotech called checkpoint antibodies. It's a $30 billion class of drugs and could even double from here. If you've heard of Opdivo and Keytruda, those are the big ones from Merck and Bristol Myers. Anyway, so Lilly tried to bring one in based all on Chinese data, and the FDA dinged them because our plan with ours, we are filing for approval this year. We just announced great pivotal data. Our plan is to cut price significantly. It's about $130,000 a year drug. We could make money for a lot less money and get market share. There were a lot of Chinese drugs that were going to come to the market, and apparently the FDA is not going to allow them to come on the market with just Chinese data. So that was very newsworthy for us and very, very important. But
can you bring it back to you though?
Sure. So we set up a company called Checkpoint Therapeutics. We put this drug in it, and then Fortress continues to get a little bit of equity every year from most of these companies, and that incentivizes us to keep looking for these opportunities. So we've done 55 transactions in the last 7 years since I took over. When I took over, there was nothing there except some cash. We've done 55 transactions. You can see the results of most of it here. Most of those go into our partner companies to build intrinsic value for them. So we try to de-risk our partner companies and de-risk ourselves. The more assets we're developing or marketing, again, every time we do a deal, and we do lots of deals, we have theoretically decreased risk by increasing the number in the pipeline or on the market. So that's all cash flow or future cash flow. And we decrease the risk because we're less and less reliant on any single product. And I think you could agree, looking at this, we're not reliant on any one product anymore. So we have hopefully a lot of upside. And yeah, go ahead.
What are the drawbacks of this model? I mean, I guess simply it would be
you'd have to call my wife, because the drawbacks are we don't see each other much. So, and I like her, I love her. Valentine's Day coming up, so sorry, honey. But that's the only.
No, but in all seriousness, though, right? I mean, the strategy is dependent on you buying valuable assets.
That's the whole industry,
right?
The whole industry does it. Inventions are very few companies end up marketing their own inventions. They buy them elsewhere. Big pharma, big biotech. I read a couple of weeks ago. There's approximately 1.6 trillion in dry powder out there for acquisitions. The worst valued segment of the stock market, or one of the worst by PE multiples, is big pharma and big biotech, because they're always losing their biggest products to patent expirations.
Yeah.
And so they got to keep buying and buying and buying and buying. So we're in the catbird seat. We're buying things they don't know about or they don't care about, and we move them ahead, and then they start to care about it.
All right. I want to bring up this slide that you were kind enough to share with us, which is sort of embodies what you just said. But the idea here being that the business model snowballs. Can you explain that snowball action?
Sure. So at least on my screen, it's a little the cross section of the snowballs on the right, where it says Fortress Biotech, and that really describes what's in the snowball. But basically, a snowball just gets bigger as it goes down the mountain, over time. And we're really building a snowball of life science, future cash flow, equity value, by having more and more product opportunities and products where we get either direct revenues, royalties, equity at the beginning. We're usually the biggest shareholders in these partner companies. And then we get a little bit of equity every year to incentivize us to continue to build these companies so that at some point, those equity dividends that we get every year will be incredible, hopefully will be very, very substantial. So the way we do it is, if you went on our website and you saw the slide, the upper left slide would say product sales and royalties. The second one would say equity, right? Because we get equity in most of these companies and continuing equity. The third would be monetization. So this year alone, Fortress brought in over $60 million in a payment from AstraZeneca for just one of those drugs that you saw on the last slide. We brought in another $8 million on a second drug. And then hopefully this year, one of the drugs will get approved and we'll sell the voucher either this year or next. That's the goal. It's a risky business. That would bring in almost $80 million to us. So there's all sorts of ways to take these drug candidates, get other companies involved to fund them. So we limit, how much we spend on R&D, add value to those companies. And so as they get more valuable, we get more valuable and develop really a serious cash flow business without taking single product risk. So it's very complicated. It's very hard. It took us 7 years to put it together. We're certainly not getting much value for it yet, but I think now we hopefully will now that we're talking to you.
And then last thing, if you can just explain this one for, I mean, this sort of sums up everything that you said already.
Right. So with all of our companies, we get some or all of these different things, direct revenues or royalties, equity dividends, monetizations, and priority review vouchers, which is a little complicated, but it's an asset you can get $100 million from a big pharma if you develop a drug successfully for rare pediatric diseases. So again, it was hard putting it together. Now it's getting a lot easier because we've got all this critical mass, and hopefully we'll be able to accelerate what we're doing over the next few quarters and years.
Awesome. Hey, you got a fan on the chat, Lindsay. William in the chat is a fan. So I think your track record speaks for itself. Guys, if you have any questions for Lindsay, now is the time to ask him. Lindsay Rosenwald is the CEO of Fortress Biotech, ticker FBIO, and has a long track record in the space. Lindsay, before we let you go, is there anything else we need to know here? Anything you can say about the not just your pipeline, but like the deal flow pipeline, how hot or cold it is right now, or anything like that?
Yeah, sure. So without getting too deep, we do have a huge deal flow. It's life science R&D around the world is probably a $500 billion research industry. There's lots of loose change. Again, we find assets that other people don't know about. That list of our pipeline is going to grow. It's getting easier because we're getting a reputation that we know what we're doing. We know how to develop drugs. We get them financed. We make it happen. So we've got big incoming, but mostly it's going out and finding it. We're hiring a lot of people. Anybody out there wants to do search and evaluate for Fortress Biotech, looking for these drug candidates, we'd love to interview you.
All right, Lindsay Rosenwald, CEO, Fortress Biotech. Thank you so much for coming on All Access today, Lindsay. I appreciate it. I had fun, and if I could just give you a gentle nudge, don't forget about Valentine's Day.
Thank you. I already sent flowers.
Hey, he's ahead of the game. Ahead of me at least. Thank you, Lindsay. Okay. Let's move things right along. Although before I bring on my next guest, I do have to do my obligatory grovel here. We're at 105 likes. Can we get to 200 likes? Our next guest is going to warrant that, I think. He's fired up. He's amped up to be here. Said he had a long day of meetings yesterday, but he's powering through for us today. Brian Cox, the chairman and CEO of SurgePays. I see him here backstage, and I see he's fired up. So let me just bring him around. I'm going to bring him on right now, Brian. What's up? How we doing?
Hey, let's bring it, man. It's Friday. It's casual Friday, as you gave me the heads up. So I've got comfortable the Lululemon Friday. So it's got the coffee going. So man, I'm glad to be back with you guys, man.
Excellent.
I'll enjoy my time with you guys.
Excellent. Yeah. So you and I have spoken before, but I never want to assume that people watching know what I know. So can you, for those that didn't see our last conversation, can you just give them the quick rundown on what SurgePays, what the business is? And then
Yeah, sure. From a high level, what we do, we are a fintech company that is bringing financial services and prepaid products, to the underbanked at a grassroots level. We've really got two core main revenue drivers, and my approach to attack the market from the front and the back. We come at it from B2B, which is where we go into these communities. And when I say grassroots, it literally is grassroots. We're not Silicon Valley. We do go into the community stores, the bodegas, tiendas, the gas stations, whatever the retail epicenter in these communities of the underbanked and underserved. We enable the clerks at those stores. We set them up on our app-based platform, blockchain platform, so that they can offer prepaid wireless top-up payments, which, we're getting close to 100 million prepaid wireless customers out there now, reloadable debit cards, gift card racks. Now we're rolling out next week selling Bitcoin for cash over the counter, which will be the first one to deploy that, into the market where the underbanked can finally get in to cryptocurrencies and digital currencies. We can load apps on customers' phones directly and instantly. Again, just using the clerk that our customers trust. They see them 5 times a week. We also have a B2C channel, which is mobile broadband. We're providing internet through tablet devices directly to customers and consumers in their hands. So we are coming at it from now we're in the homes of the underbanked and underserved, providing them internet directly, and then we're also in the stores where they shop.
This would strike me, Brian, as more like an emerging market play. Where are you right now? Not you. I know where you are. Where are your customers right now?
As far as our customer count, or where are they living?
Yeah. Like, are we talking like, this is the U.S. North America business? Are you in some other emerging markets?
Yeah, no, right now the market is so huge in the United States. That's definitely our focus.
Okay.
And a lot of our contracts obviously are, whether it's with the AT&T Tower Network or the T-Mobile Tower Network. We do provide and specialize in the United States, but our platform, we did build our software from the ground up. Like I said, we even did a 2.0 version 4 years ago on blockchain, and it is capable of being deployed into any other country, any other language, especially with the digital currency piece. So to be completely honest with you, I don't chase shiny objects. The opportunity, and we're in hyper growth mode right now in the geography and the capacity we have right now. So we're hustling big time, and when you ask where our customers now are all over the country, every race, the immigrant population, anyone that doesn't have a checking account, credit card, anyone, put it this way, anyone watching this show that has money to invest in the stock market is not the underbanked. And I think a lot of people live in their bubble and they don't realize that almost a third of the country is underbanked. So that's my market. I've been in it for 20 years. We've been extremely successful. Got a great team behind me, guys that fired up and energetic like me. And we're doing fantastic. Days are good right now. This is fun.
So I've got a couple of graphics here you're kind enough to share. I'm just going to pop them up on the screen right over our faces. Look at that. Beautiful. This is your core right here, right?
This is one of the, I'll call it the Trojan horses that our salespeople use. Most of the independently owned mom and pop corner stores that are run by entrepreneurs, a lot of them immigrants, they are unable to qualify for anything related to KYC type products, reloadable debit cards, gift cards, anything that moves money. They're not large enough. And they always in their hearts want to compete with that Circle K, 7-Eleven, Raceway, the big boys. So it's a little bit of a vanity play hook, if you will, for our sales guys, because to be able to activate those gift cards, and you saw all of them, or to be able to activate cell phones, we've deployed our entire suite into that store. And, one by one, you build the relationship with the store. And you add oh, by the way, hey, Spencer, did you know that you had the ability to take payments for Metro PCS, Boost, TracFone, Cricket, every wireless company out there? Hey, did you know you can load debit cards? Hey, you can sell, you can't just jam it down their throat day one. You get one product in, show back up, which, by the way, showing up, they say showing up's half the battle. In sales, showing back up is the battle. That's what most people in this industry don't do. And it's really, and the reason is most competitors out there only sell one product. So your goal is just to get the store on the network and go to the next store, conquer and go, a road warrior. Our model is a relationship with the store so that we can get more products into the store. I'd rather do $2,000, $3,000, $4,000 a month per store than just have a bunch of stores trickling in revenue every month.
So if I can understand this next graphic correctly, this is your universe. Is that fair to say?
That would be our fintech universe.
Okay.
The B2B. If you, and to give people, I get this question all the time because people confuse us a little bit with Bitcoin ATM type companies or that interactive. And I kind of have a rule of thumb. The underbanked, and this is not a derogatory remark, but the underbanked by definition are usually going to be untrusting and unsophisticated. I did not find that the Bitcoin or any other type of ATM interactive device, number one, it costs a lot of money and then you got to maintain it. My philosophy going back 20 years ago, even to home telephone, was to use the clerk as your ATM. They trust the clerk working at that store. They see them all the time. They know their name. So if you look in the top right, we've got a web interface where our app, secure app, connects to our servers and can do every transaction you see on this page. If it's let's say, for example, in New York, a bodega that's got all the 5-hour energy and all the chaos, bulletproof glass, a little cubby hole. They don't have a computer at the register. They don't have room. We also have a Verifone terminal that our engineers reprogram the internal software and allows the stores to do all of these transactions through the terminal. So we have solved the problem, for stores that maybe are more urban and don't have internet or what have. But yeah, these are all the products that we bring. And you can imagine if I just get my foot in your store, it's very difficult for anyone to ever displace us because just because we provide you all of these services, I'm going to cut the rates. I'm going to box out. I want to dominate that store.
Well, all right. So that sort of leads into my next question, which is like, I guess, who would that be that could try to encroach on you? Are we talking like the Apples of the world here? Because they're launching their own payment terminal, or are we talking like Square?
No, not really. The in the market right now, and keep in mind, those guys usually acquire companies like us down the road.
Yeah.
So the PayPals, Amazons of the world. But our competition would be more regional companies that do just prepaid wireless local cards, or they just do prepaid wireless top-ups, or they're their own MVNO, which is a prepaid wireless company.
So, like, why / how is there a need for SurgePays? Is it just that like your segment of the market was just overlooked for some reason?
Our segment of the market is hard. I mean, you think we have 8,000 stores right now. Every one of those stores, a person had to pull that door, shake their hand, get their checking account information, and we have to have support. We've got 130 people in Central America working in our ops center, and there was a significant amount of capital. I mean, you can look at our financials the last 3 years and see what we've invested in building a software platform to pull all of these products into a comprehensive suite. There's not many people, bluntly, like me, that have been in this for 20 years that have had the success that we've had. And there's also not many CEOs at my level that have pulled thousands of doors because you started your company with a dorm fridge and a mattress on the floor and a dog. That was it. So that ultimately was the company that is now SurgePays. So the things I've learned by doing stuff the wrong way and just not repeating it tomorrow the wrong way, and moving things down the road, understanding your customer, number one, understanding your client, which is the store, number two. And then with the launch of our mobile broadband product last year, that was the last piece of the puzzle. The last piece of the puzzle, going direct to the customer and being able to put out some crazy numbers at a very, very high margin level to offset that fintech margin was a big blended margin, huge win for us.
All right, let's talk about this thing you sent over to me right now. This would seem to be a little contradictory to me. On the one hand, we're talking about the underbanked, and I guess like, do the underbanked do they own Bitcoin? I don't know. Maybe they do. I guess you wouldn't have done this unless you had seen a need for it, right?
I wouldn't have done this if our operations centers in El Salvador. And if anybody that follows digital currency knows El Salvador is the first country in the world to adopt Bitcoin. We, being down there for 15 years and having 300 to 400 employees, you can imagine that we have access to people who know what's going on in the government. We were talking to one of the second or third people in command there, to the president, and we asked him why the president's so gung-ho on Bitcoin. He said all of Central and South America will be gung-ho on Bitcoin. Our president is younger and he took a risk. The reason is remittance from immigrants working in the United States, sending money back to their family, is usually 25% or more of GDP of all these countries. And the transaction from their families sending money stateside to their country is usually between 15 and 18% taken by MoneyGram, Sige, RIA, Western Union. And they made an interesting point. Hey, the guys working up in the States, the guys working those labor, they're going to send the same amount of money. If we can prevent and avoid these fees, all of that 15, 18% goes into our local economies. Our problem is we don't have anyone on the state side that can convert cash to Bitcoin. And like, whoa, okay, opportunity. This is 6 months ago. So we went out and look, this is not going to be something that's going to be adopted overnight. I realize that this is probably going to take a year or two. But if I'm up here working my tail off and I want to send $300 a week back to my mom in Guatemala, El Salvador, or whatever, and I can send $300 back and not $245, that she ultimately gets that value. And look, hey, what El Salvador did, they set up hundreds of fee-free ATMs. They also set up their own digital wallet and encouraged every citizen of their country to get it, and they give them $5 in Bitcoin. Do you know there's more digital wallets now in El Salvador than checking accounts?
No, I didn't.
Yeah, but well, so if that's the case, and my mom's in El Salvador calling me saying, Brian, hey, stop sending Western Union, send it to me on my digital wallet. You got the information, and then I can go down to the ATM at the gas station and get cash as needed, fee free. That 15 to 18% is now going to be circulating in the economy of El Salvador. So Ecuador was quick to follow, and I believe once this model proves out, the key to it is how do immigrants buy Bitcoin stateside? So that was our crux. I'm not a mad scientist. I listen. I think with my ears. I listen for the opportunities. Like, well, man, if we're already in these, we've already got a bilingual operations center. We've already got people out on the street bringing on the stores where these people shop. It only makes sense that we could be that company that could really be the catalyst for adoption for let's call it remittance avoidance.
Sure. So we're talking mostly about El Salvador right now because they're the only country, right, to my knowledge, that has actually made Bitcoin legal tender. Unless there's another one that I'm not. I know there was a few more countries.
I think Ecuador and or Uruguay. There's a couple that are in the process.
Okay.
But even if it's not legal tender, if there's an ATM that I can go scan my my wallet QR code and it spits out cash. And again, I mean, I can't fathom working 18% of the week just to send that money back.
Sure.
That's the reality.
I mean, it's pretty the market opportunity. It's pretty self-evident at this point. I'm curious, Brian, without getting too into the weeds here, what you for the different parts of your business, can you just speak a little bit about what those margins are like? I'm just be curious.
Yeah, no, hey, I'll dive right in. I'm an open book on this. The Bitcoin product, there's not great margins there because you're just moving capital from from A to B.
Yeah,
there's a big margin there. Otherwise, I would be just like Western Union, and I'm not. I'm trying to enhance the lives of the underbanked because I know the underbanked will come back to us, and our stores will take care of us. The margins on all the fintech products, whether it be prepaid wireless top-ups, loading debit cards, loading Amazon Cash, loading iTunes, anything we're doing with it, anything we do for the underbanked that you and I would have a credit card supporting. Those margins are all fintech margins. Those are, between, let's say, 4, 6, 7%, depending on the product, which is why I counterbalance that with our own products. And that's why the, having our own telecom, our own mobile broadband product was so important, so that it would counterbalance that, and that blended margin would be significantly higher, but we could still get the revenue growth from the fintech side of things. And to put in perspective, Our mobile broadband product is $30 a month, and my margins are ballpark 60%. So it's a significant, and considering that we just, let's see, 211, we just passed, I'm in a good mood today, Spencer. I got to be honest with you. I just looked at my numbers yesterday. I was giving presentations from 8 a.m. all the way till the evening. So I didn't touch anything all day yesterday. I had nothing to do with anything operationally. We broke our single day activation record. We did over 1,500 activations in one day. We crossed the 52,000 subscriber threshold. And that alone is exciting to me. But the fact that I had nothing to do with it, my ultimate success is building it and putting the right team in place where I don't have to touch it, so I can be talking to awesome guys like you, telling people about what we're doing. So yeah, this is we're pretty stoked right now. We've got all of our products our sales are up, our margins are up, and I'm in an interesting window of time right now, because if you look at our company with our filings, all you see is the first 3 quarters of last year, which was before we got to NASDAQ. That was, we were in get across the line mode, dialed in development, everything to get it across the line at NASDAQ. That was our sole laser focus. You don't get to see the fact that we're not burning, and let me say this twice, we are not burning money anymore. We're not burning money anymore. I will not raise or have to raise money to survive. I'm the largest shareholder. I do not want to dilute the company. I did what I had to do to get us to NASDAQ. I went through the Play-Doh spaghetti maker to get us here. I'm not doing it again. So the fact that I can wake up every morning now and know that all of our overhead is more than being covered, my decisions, my challenge on the financial side now are, and this is what I talk with our CFO every day, how fast do we grow? There's people that push us, and this is the age-old question, I guess. Is it better to be bigger, stronger, faster 2 years from now? Or do we want to show profitability and EBITDA margins because we slow our growth or pace our growth over a couple of quarters? I like hearing shareholders' feedback on that. Now, me personally, I did this for the big picture play. I'm not just the CEO. I am the largest shareholder, so I do run the company that way. I want to get as big as we can, as fast as we can, without imploding from cash flow. But that's for my problems in 1 year to go from, hey, Brian, we need some help covering payroll, to, hey, how many devices, how many millions of dollars of devices should we buy this week? This is somebody told me.
Wait. Did you just say a year ago you needed some help covering payroll, or did I not understand that correctly?
You said that correctly. I was the financial backbone of SurgePays to help get us across the line. I instead of doing one product or 2 products and then getting to NASDAQ and expanding, I went ahead and decided that huge suite of products you saw, we had to integrate with every single one of those companies to provide those products in a streamlined approach. So look, ultimately at the store, these stores are not run by accountants. They're run by people working 12, 15 hours a day. For us to
not your own payroll. Okay. Wait, I'm confused.
Yeah, no, a year ago, SurgePays, we were burning money.
Okay.
We were burning money. We were burning burning probably $300,000-$400,000 a month.
Okay.
Wow. And it was
now how much of that was could you tie to the pandemic?
What we could tie to the pandemic is our original model showed us hitting NASDAQ a year earlier than what we did.
Right.
But I'll be blunt with you. Being an entrepreneur, your revenue is lumpy over the years. You don't have it's not just this year.
For sure.
My two best runs were in the 2 worst financial times of the last 20 years. What you got to do, you got to step back and see the opportunity and not let fear creep into your mind. So while we couldn't push things along as fast as we wanted to on the NASDAQ uplist, I knew I had the capital to get us across the line. So I kept building. I didn't throttle. Now, what it stopped us doing a little bit on sales, you can't go into a store, a corner store, a gas station, with a mask over your face and try to sell somebody. Part of the sales process is in 10 seconds building a relationship with that guy. You can't do it like this. So our sales were flat. So what we did was we all huddled up and said, hey, you know what? We're going to have the capital from the NASDAQ uplist. We're about to launch all of these products. Let's go ahead and do what I call water testing, test the pipes. Where can we increase margins? Do we have unprofitable products that we're selling because of our gut and not our brain? We eliminated all that. We we cut our burn in half so that now I can sit here today and know that, again, we're not burning capital because of the things that we did during the pandemic to tighten up all the screws.
All right. I want to leave a couple minutes for questions from the chat real quick here. Voodoo, can I use this service to convert my Bitcoin to cash?
I don't convert Bitcoin to cash. We go the other way right now. I will say this, though. This is a multi-phase development project. Phase one was being able to sell cash at the convenience store. Sell Bitcoin at the convenience store. That was one, because that's going to address the need for immigrants.
Right.
Two is being able to use digital currency to make purchases at the convenience store. And then three, the reason the third one's interesting is because that gets into a little bit of a regulatory gray area. And I don't really want to be a Braveheart or Joan of Arc when it comes to debating regulatory folks. I'd rather somebody else blaze that trail. There's just too many other opportunities for us. That is a good question, though, but we do have a multi-phase rollout. And at the time where we're comfortable being able to give people cash at the store for their Bitcoin. But keep in mind, that would be something that would benefit guys like me or you or folks that play in the market.
Fair.
I'm looking for my tip of the spear products I want are the products that help those 100 million people out there that are my core market. Could I make money by doing that? Yes. It's a shiny object, though, that kind of distracts from that core market. And as we're growing as fast as we are, I really don't like jumping lanes until you start plateauing or seeing the law of large numbers kicking in.
Last one here from Phil Hall. So I don't know where he got this stat from. He said the average person in El Salvador typically earns $1,700 a month. So is this mostly low-income people embracing Bitcoin?
Yeah, and that was the goal of the government. And the crux of this was the amount of money compared to their GDP. I mean, when you got coffee and call center services and remittance, money coming in as your three top GDP items. And again, this came from them. This came from the government. You know, the impact locally it would be. So, yeah, absolutely. It would be your lower income folks in El Salvador, the families that were left behind, relatives working in the States.
Brian Cox, Chairman and CEO of SurgePays. Brian, always a pleasure to chat. I'm glad we got you on a day where you are in a good mood. That's preferable than the other.
Every day is a great day. Every day is a great day.
All right. Thank you for joining us on All Access today. Have a great rest of your day. Have a great weekend. And if you really did give presentations all day yesterday and today, then maybe just take a break or something.
I've got follow-up calls today. Hey, I'm on a mission, my friend. It's time to go. Got to chop wood.
All right. Have a good one, Brian.
Hey, you too, sir.
Hey, I like that reference. Got to keep chopping wood. Keep chopping wood. Keep chopping wood. Whoa, there we go. My camera flipped out. Now I'm back. All right. Here's what we're gonna do. We did actually have a schedule. We had a break on the schedule today, and we are more or less running kind of on time, all things considered. So our next speaker here is we're gonna hear from well, it's a little bit complicated because there's a merger, but Jupiter Wellness and Next Frontier Pharmaceuticals are merging, and we're going to hear from the Shannon Soqui, who is the chairman of Next Frontier. But we did have a short break on the calendar. I wanted to bring on Money Mitch right now because, Mitch, I'm totally blind out there. I have no idea what is happening in the broader markets. I don't know. You tell me. I literally can't guess anything. So let's bring on Money Mitch and have him inform me what the hell is going on out there. Mitch, what's up, man? How we doing?
Not too bad. Not too bad. You hear me well here?
Yeah, you're a little loud though.
A little loud?
Yeah, a little loud. A little loud.
How's that?
Much better. Much better.
Right,
Mitch, I appreciate you jumping in to save the day for us. I don't even know what was going on a couple hours ago, but all I know is Mitch jumped in, and I appreciate that. So thank you for that. Let's bring up your charts here, and then just for a few minutes, we're going to just talk about the market, and then we'll go back to our interview segments here. So what are you watching? How are we doing out there? I see green. Green is good.
Yeah, green is always good. Definitely seeing some green out there. Leading us today, energy, of course. And behind that, if you take a look here, you'll see utilities, financials. There's a lot on the move. I take a look at the percentage from the open. I think that's the most important here. You see basic materials up, inflationary trade going well today, silver up 4%. Coal up 2.56, gold up 2.68. Definitely inflationary trade working well today. What other stocks are moving today? If you look at the consumer cyclicals, you'll start seeing what reopening trades. And then also, I've talked about this trade for weeks now. The Super Bowl trade looks like it's on, guys. DKNG, look at DKNG pushing on up there today. Nice little chart here. Nice little VWAP bounce trade. You guys could have been going after that. We talk all about VWAP bounces on live trading with Benzinga, and that's one of our top strategies. Also, Penn having an awesome day. Look at this one. I was setting this one on up, looking for the breakout, and man, nice little breakout there that we have in kind of this Super Bowl trade. And then also, of course, reopening trades doing well right now. Look at lodging. Lodging's doing really good right now. You can take a look at like Hyatt. You can look at Hilton. These have been doing really well lately. And let's take a look at some other reopening trades other than lodging, right? Like airlines. Look at American Airlines holding well today. Been talking about how the reopening trade is on, guys. If you take a look here at my index for airlines, look at the strength in the last week. This was on Monday, this first green candle that you got here. You had a reversal candle on Friday. And then we really started to push on up there. My index overall for airlines is up 10%. And definitely you can see here some airlines doing really well. Even ULCC after that deal has actually gone straight on up. You can look at Save holding the gains from their deal with ULCC. And we'll see if these can kind of continue making moves. But definitely reopening trade is breaking out there.
Is there anything that's not? Is there anything that's not up today? And we are going to bring on our next guest in a minute here, and I'm actually going to bring on my colleague Michael Murray. But is there anything that's not up today, Mitch? Help me out.
All right, sector-wise, the weakest sector is technology. For me, it's up only 0.03 overall, and from the open, it's actually down on the day. So if that's what I'd have to call is not making big leaps today, it's just going sideways. If you look here at the Qs, you'll see sideways action, and I think it just needs to get out of the range. It's right now in the sideways action. Doesn't mean it's going to stay like this all day. We'll see if it can get back above, let's say, this 361.50, on the downside 355, and then these are the levels that I would call out in the Qs. I did call out a trade that I'm still in right now, guys. VLDR. Called this one out in pre-market prep before we even got into the open here. And look at that stock doing really well, working for us. We'll continue to watch this one. This one had news, and that's why I was trading it. It wasn't only a technical move. We had a pop on Monday. We've gone sideways for a couple of days now. I was looking for us to break out of that consolidation zone, and we'll continue to ride this one. Velodyne, LiDAR play.
Nice trade. I missed that call out. I was busy prepping for this show. All right, nice trade there, Mitch. Nice trade. VLDR. All right, this is better than I was hoping. I didn't know what to expect when you came on here. I don't know if you're going to bring good news or bad news, but mostly Noel says biotech is leading the way. Hey, look at that. Look at that. That hasn't been able. We haven't been able to say that very often, but biotech. Oh, look at the XPI. Look at that. All right, this put me in a better mood. I would have been in a sour mood if Mitch came on and brought the red with him, but he brought the green, and you like to see it. So
it's the only way I know, man. Money, Mitch. Let's do it.
It's green. It's got green on the screen. Look at that. I've got purple. I don't know why it's purple back there. Maybe I should probably change that.
We gotta change it on up, but definitely excited
now.
Excited to see at least a little bit of a bounce. One thing that I have been seeing is the market showing a little less fear, even though we got those hard down moves yesterday with comments of Bullard. I have been seeing, at least from my price action, people are taking some shots out there. So I do see traders making moves. We'll see if that continues. Like always, you guys can catch me on live trading or Money Mitch, and always right here on Benzinga. All right.
Mitch, I appreciate you so much today. Thank you for coming on, not just hanging out with me for a few minutes, but also just like stepping in about an hour ago when we had all kinds of audio gremlins and video gremlins, and Mitch was like, nope, we're doing it this way, and it worked, and here we are now. So y'all can thank Mitch for the fact that we were able to keep the train running on time here. Let me bring on, before we bring on our next guest here, let me bring on my good friend and colleague, Michael Murray, who I'm told is ready to roll on his end. Is Michael Murray ready? Michael Murray!
Spencer, how are you?
Doing well. How are you? I know that desk.
Yeah, this desk. It's a good spot. I mean, I've been impressed with the desk, the setup, all the technical difficulties you guys worked through
Just
today.
don't mess anything up for me over there. Okay. Don't like mess with like the wires. Don't break anything. Just don't touch anything. Okay.
I just sit where Rohan tells me to sit, and I just do what I'm told. So
all right.
I'm good.
All right. So that's fair. So the reason I'm bringing Michael on is because I have to step away for a couple of minutes here, but I said, Michael, we have Shannon and Soqui coming on from Next Frontier Pharmaceuticals. This is probably one of the ones today I was most looking forward to, because we have like M&A happening like in real time. Well, not real time, but like M&A. We're in the middle of an M&A deal right now. So I don't want to like tease it anymore. Michael, I'll let you introduce our next guest, who I'm excited to hear from, because I want to hear more about this deal that is closing or yet to be closed, but we'll figure it out.
We're in the middle of it. Yeah. So we're going to bring on Shannon Soqui. She is the chairman of Next Frontier Pharmaceuticals, as you mentioned, in the middle of the M&A. Let's bring her on.
Shannon.
How are you?
How are we doing?
Doing great.
All right, I'm going to step off. Sorry.
Here. All right, let's do it. Spencer, thanks for the intro. Shannon, great to have you with us. How are you doing today?
I'm doing great. Pleasure to meet you, Michael.
Pleasure to meet you as well. This is very, very exciting. As Spencer mentioned, with a great intro, we are in the middle of an M&A phase, right? We are very excited to talk to you about this. Jupiter Wellness, they're a publicly traded company. They're under the symbol JUPW. They recently signed a definitive agreement to merge with Next Frontier. So it's great to have you with us. We're really excited to get your perspective and get some details as to what's going on here. So dive right in. Can you talk a little bit about where the merger's at? Why did it happen? Give us the overview of the situation right now.
Yeah, thank you, Michael. Yeah, we announced the merger on December 8th of last year to merge my company, Next Frontier Pharmaceuticals, into Jupiter Wellness. We're on schedule to close in early Q2 this year. It is a stock merger, and the reason we did that, the merger transaction, was combining our pharmaceutical cannabinoid business with the Jupiter Wellness platform that they have, and being publicly traded definitely adds value to us growing faster with what we're doing on our business. So happy to tell you about what we do and why we're excited about the space. And
yeah, no, that's a great next step, right? So let's go into that. Why is this so exciting from New Frontier's perspective, right?
Next
what are you guys
Frontier.
looking forward to?
Yeah, it's exciting because this is all about drug discovery related to cannabinoids. We have one of 4 FDA-approved cannabinoid drugs in the world. It's called Syndros. It is a THC-based drug. It's the only THC-based drug out there on the market. It's the only FDA-approved drug that's based in the U.S. And we also have a very strong clinical drug pipeline. We have a formulation for Alzheimer's, dementia, agitation, anorexia associated with weight loss in cancer patients, and pancreatic cancer. Now, the interesting thing about our pipeline is we're using the same formulation of Syndros. Syndros is what we call an oral dronabinol solution. Dronabinol is a generic form of THC, and that formulation works well with these 3 indications. Why do we know that? Because a lot of doctors prescribe Syndros off-label for other indications. And we have a lot of good data and signals that the efficacy is there. And so that's why we're excited. If you go to the next slide, that one, this is kind of how we decided on these 3 applications. What we try to do is look at about 50 to 100 medical indications where there's evidence that cannabinoids work to treat it. And then we boiled it down to said, okay, which ones have the biggest markets, total addressable market? Which ones are solving an unmet need where there's no FDA approval? And which ones would be applicable for our existing solution that's already been approved by the FDA, which gives us a fast track pathway to get approval, and so forth. So we boiled all that down and we came up with our 3 new drugs. And so if you go to the next slide, I can touch upon, So drug discovery and development is very costly. It takes a long time. Most people know that. And you've heard of phase 1, phase 2, phase 3 studies. Well, each study, you're trying to get evidence or data of efficacy or validity. And then at the very end, you hope the FDA signs off on it. And then you have a golden product. You have FDA approval. So we already have that with 1 drug. And since we're using the same formulation for our other 3, you can see at the bottom here, we have safety and quality already taken care of. It is that final efficacy stage, which we already have anecdotal evidence that it does work. And with our whole platform, we think we can bring these drugs to market with half the time, 3 to 4 years versus 6 to 8, and at a third of the cost. So as you may know, the drug business is big business. These are big markets, and we're very excited to be a leader in that. We have one of the most prominent or most developed manufacturing facilities for our products. There's a slide next you could show, or we have that's a little bit more on our stage of development of our products. But here we have an 83,000 square foot facility. The key here is because cannabinoids is a controlled substance. It is regulated by the federal government and the Controlled Substance Act. We have a permit with the DA to manufacture controlled substances on Schedule 1 through 3. So it covers all of these products. And we also recently applied with the FDA to manufacture psychedelics, which is very synergistic with, medicinal applications and using novel organic ingredients to treat it. So, in a nutshell, that's what we do: drug development, discovery, big markets, and very, very excited about the prospects and happy to answer any questions.
Yeah, absolutely. So let's dive into this a little bit further. Now that we have an understanding of your products, what Next Frontier is doing, let's talk a little bit about Jupiter, right? I know we don't have anyone from Jupiter with us today, but talk to us about, in the M&A phase, there's so many factors that go into the decision of who to merge with and why it happens and all of that. But talk to me about Jupiter. What was it specifically that interested you so much in Jupiter Wellness, and why did this merger come about?
Yeah, good question. Thank you. Well, number one, as a company, for us, we were looking to go public or be part of a public company. And if we had gone public on our own, it would take 6 to 12 months. With Jupiter, since they were already trading on NASDAQ, they were already positioned as a pharmaceutical cannabinoid company. They had a very, very strong balance sheet and still do, no debt, and the right management team that had the vision that, hey, the pharmaceutical cannabinoid business will be big. It's already started. We all saw GW Pharma sell for $7.2 billion to Jazz Pharmaceuticals last year. And GW was one of the holders of one of the 4 FDA-approved drugs. Their drug was Epidiolex, used for epilepsy in children. And so having that shared vision of the team and our asset base, we are private. So being public, there's a lot of power there. It enables us to expand our investor base, get public exposure, part of our branding, and raise some extra capital to execute. We are highly sought after. I'll say we are in discussions with several Fortune 50, Fortune 100 type companies that are not in the industry that are interested in it. I would say, you can think about some consumer packaged good branded companies out there that there is a nexus here with what's going on in the cannabis space. And it's pretty exciting. But that's why we did the deal, and that's why they chose it. They chose us because we had the best team, best asset base. We have about $300 million invested in our business, in IP and our factory. And we have the FDA-approved drug. We have the clinical drug pipeline. We have a host of patents. We have, we think, the best clinical research executive in cannabinoids on our team. And we have a lot of good business development efforts and customer base and, opportunity to grow the business. So we just need time. We need capital. We need to complete this transaction and really execute.
Perfect. Okay, so let's follow up on that, right? Opportunity to grow the business, a line you just said. Let's talk about that a little bit further. To the extent that you can, talk about what you guys are planning with the extra capital this will unlock, right? You mentioned this when it comes to points that are going to help with growth, but as you're able to access more money, more capital, what is the investment going to go towards? What are the priorities for growth in 2022?
Yeah. And again, another great question. Thank you. Yeah, our top priority is advancing our clinical drug pipeline. We'll have some good data indications within a year, we believe. We don't need to spend much. We are partnering with offshore clinical research organization in Australia to help us with our research. Half of that gets funded by the Australian government, which is great. So we don't need to spend much there. And on our manufacturing facility, we're fully built out. And so we don't need much capital. We need a little bit, and it'd be nice to have a reserve. And I think for each of the drugs, it's probably around $10 million to get them through the approval process, but it's only maybe under $1 million each for the next 12 months. And then it would start ramping up as we progress. So from a drug development standpoint, it's not that much capital over the next 3 to 4 years to get completion. That's probably $10 million for each of the 3 drugs, $30 million. Right now, our burn is quite low. We could be profitable on our manufacturing business if we wanted to, because we do have excess capacity and we have some big strategic partners that want us to manufacture for them. So we have a unique model where we can actually make money manufacturing and help it fund our drug development business. But we will need a little bit of capital post-merger once we can get the stock price up. I believe it's a $5 to $10 stock where it should trade at these prices. I wouldn't want to raise any money on the equity side. When we look at comparable companies in the space, our asset base is probably 5x of what they are, and they're trading at $500 million to $1 billion. We just need to close this transaction, execute, keep announcing our milestones. We just announced the launch of our Alzheimer's drug. We have a couple other developments that we should be announcing soon, and just keep executing.
Yeah, absolutely. Keep executing, right? It's a little bit of a side note question, but one of the questions I love to ask everybody that comes on All Access is to take us into the human side of this, right? You're going through this merger. The amount of detail and the amount of things that have to come together to make something like this happen is unbelievable, right? It's a mind-boggling amount of work and time and effort. Yeah. Talk to us a little bit about the human side of this. What had to go into it? What were some roadblocks?
It's a great question, again, because I've been doing M&A for 30 years. I formerly was an M&A lawyer, securities lawyer, and an M&A banker, and an M&A accountant. So I've been doing that actually for 30 years. The human part of it is half the challenge. I always said, being a banker, closing an M&A deal, half my job is human psychologist, reassuring the parties that this is the right thing, and really shining a light on the facts and the argument and the business case, the thesis. Can we get synergies here and accrete value to the shareholders? That's what it's all about, maximizing shareholder value through these corporate transactions. Now, some of it is speculative, and that makes it hard. But you take an educated bet with the facts you have, and we look at Jupiter and we say it's not $1 stock or $2. With us, it should be a $25 stock in the next 3 years. It should be a $5 to $10 stock out of the gate. How can we realize that with our private company, merged into them as a public entity. We'll be taking over the management and execute and bring value to the existing shareholders and new shareholders that may join us. And so there's a lot into that. And most people who sell or merge, they haven't done a lot of deals. And so they need a lot of reassurance. There's a lot of loopholes or pitfalls, legal, financial, accounting, business. And even if you got all the facts right, there's still market risk, uncertainty, legal, COVID, you name it. We've had everything thrown at us over the last 3 years, and we've been thriving even more just because the market is so white hot for the applications that we have our products targeted at. So I just tell people, be patient. You know, it's taken a while. I bet my career on cannabis back in 2014. So I've been at this for 8 years exclusively doing this. I most recently ran cannabis investment banking at a large global bank, and I like to say I've met everyone, I've seen everyone. This is the opportunity I chose because I thought it was the most compelling, a chance to create truly a $10 billion company. We saw GW do it. We'll be the next one. I don't know if I can say it. I think we have more IP than them. And I think I like our story and the fact we already have an FDA-approved drug, and we have a great pipeline to leverage off of that. And
got it. Okay, so drawing close on time, 2 more questions coming off of what you just talked about with the potential in front of you, right? How do you see the market that you're in shaping up in 2022? What are some risks? What are the growth opportunities? What's the landscape like?
Yeah, market, I think it's wide open. I mean, it's still the top of the first inning of a 9-inning ball game in this space. GW Pharma started the game. There is so much ahead of us. The opportunity is, well, unless they solve Alzheimer's, dementia, agitation, which is only getting worse, pancreatic cancer, people are dying. Anecdotally, our drug has shown to extend the life for up to a year, and we're trying to prove that through the clinical trials right now. And same with Alzheimer's. We think our product slows the plaque buildup and will either slow or stop the further onset of Alzheimer's. So all of these, anorexia and cancer, all of these needs are unmet, and they continue to be unmet, and they continue to be either untreated or treated with something else that is not optimal, that's not safe or proven, or there's no targeted application. So that will always be there until it gets solved. The macro market around us will fluctuate, but the demand for our products is there. It's only getting more intense when you think about, if you think about the broader cannabinoid space, there are so many applications. There is for drugs. There are so many applications for over-the-counter registered products. And we're seeing a wealth of multi-billion-dollar Fortune 100 companies come in to investigate, hey, these are consumer products. You're treating wellness, and it's organic or synthetic. And, you know, there's a lot here. So the growth, I see robust growth over the next 10 to 15 years at least in the global market for cannabinoids. And because it works, it's organic, it's safe. And in lieu of opioids or Xanax or Ambien or all these other some harmful pharmaceuticals, we think cannabinoid-based medicine is safe. It's healthy for the body. No one dies of an overdose. No one dies of lung cancer. It works. If it's safe for children with epilepsy, you got to think it's safe for adults for pain, inflammation, a lot of these ailments that people suffer from. And
absolutely,
that's why we're bullish on it. So despite COVID or whatever, we think there's a long, long runway here. And if you ask me how big is this market, it'll be $1 trillion global cannabis market within 30 years. It's already 150 billion, 200 billion if you count up all the pieces. So
yeah, and I think that's the most exciting thing, right? And that's what I was looking for, and that's what you laid out is the potential for a $1 trillion industry. It's fascinating. So final question for you as we draw close on time. We're looking at the opportunity here, $1 trillion industry in the future. What's the roadmap for 2022? Where does the merger stand right now? What should we be on the lookout for? What's happening in the next couple of months?
Yeah. Well, we need to follow our documents with the SEC, get the shareholder approval. That will happen in early Q2, knock on wood, or sometime in Q2, depending on their comments. And then once we close, we will be taking over the company, and we will be executing feverishly on all of our strategic initiatives, our clinical drug pipeline, taking care of some of our existing customers we have on the manufacturing side, getting into psychedelics, further advancing our Syndros drug, etc. So, yeah, we have a lot to do, and we look forward to the opportunity of being public and reporting publicly our results, and meeting investors and analysts, and ideally, getting research coverage picked up on the company, attending some of the high quality investor conferences, and telling people about our story, and because we think it's a good bet.
Awesome. Well, we're certainly looking forward to having you guys back on again soon as the growth continues, as the merger continues to play out. But again, it's Shannon Soqui, the executive chairman of Next Frontier Pharmaceuticals. Great to have you on. Thank you so much.
Thank you, Michael. I appreciate it.
Been a pleasure. Awesome. All right, we are getting ready for our next guest. Spencer, are you backstage? You wanna spend a minute with me as we get ready? Do we have our next guest?
Hello. Can you hear me?
I hear you. How you doing?
You hear me?
Yeah.
All right. Thanks for stepping in a crunch, man. Today's been a day.
Take a breath, man. You've done a lot of work. It's been a lot. Take a breath. You're doing great.
Thank you for stepping in for me here. We are going to be having Gerald Commissiong from Todos Medical on in a couple of minutes, which you are prepared for, right?
Oh, are you kidding? I love
surprise. You're doing that interview.
I've gotten to talk with him a bunch of times. Okay. I love Gerald.
Okay.
But before we move to Todos, wait.
Okay, yeah.
Debrief with me, Jupiter. What did you get out of that? Because I thought some of the stuff he said was really interesting. But what did you get out of it?
A lot going on there. So first off, it's always interesting when you talk to a company that is in the middle of a merger, because there's not a lot that they can say, right? Like they're sort of in this weird period where it's like what they've put out there is out there, but they can't say anything more than that, and they're sort of it's subject to shareholder approval. So I first off, I do appreciate Shannon coming on at all, frankly, to in the middle of this process. So that was the first thing. Second thing was, look, you guys know that I am like long-term bullish the cannabis space. I own several cannabis stocks, recreation, pharmaceutical. I don't medicinal. I don't care. I'm bullish the space. That doesn't mean I'm going to go out and buy every single company working on cannabinoids. But I appreciate anybody that is doing anything to develop cannabis-based drugs. Now there are a couple. Well, no, there is the one. There is a JUPW Pharma. I'm blanking on the name now. Oh my gosh, someone in chat help me out. Epidiolex. Sheesh, it's been a day. There is the Epidiolex that is already out there, but this is such a limited market right now in terms of the competition. There's Epidiolex from JUPW Pharma. That was, what was that? Chat, help me out. What was that, like 4 years ago now? 5 years ago that they got that approved? And outside of that, that's kind of it. So anybody developing any CBD-based drugs, count me in for, at the very least, like rooting for them on the sidelines, because we need more of them. That's my honest take. We need more cannabinoid-based drugs, and so they have their Syndros. Let's just see more. Yeah, let's just see more. That's what I've got. So I'm talking backstage with some Benzinga people about about Gerald, because Todos was supposed to come on at 11:40, and I called him up and I was like, "Hey, you want to come on a few minutes early?" So his scheduled time is not actually for a few minutes, but I figured we would get him on here in between. So he'll join when he joins.
So what you're saying is we have bloviation time?
Well, you know what I forgot to, do this morning, Michael?
Did you forget the crypto update?
This is gonna no, not that. This is gonna look really weird. But I had this hat here. I was gonna wear it after I played the ticker video.
You're just gonna wear it now?
But I forgot to wear it. I forgot to put it on. I don't even know how to wear it right now because I'm wearing this clunky headset. But this is my ticker hat. They were kind enough to stop by the office. How does this even work? They were kind enough to stop by the office today. Let me drop the link in the chat. Okay. Well, it's on the screen, I should say. TIICKER.com/Benzinga. Open that link and open your account on ticker. Then confirm your email. And when you confirm your email, there's like a little box on that confirmation page. It says, "Hey, are you from Benzinga? Did you come from Benzinga All Access?" You say, "Yeah, I came from Benzinga All Access. Why I'm here." Check the box so they know that's you. Okay. When you check that box and then proceed and connect your brokerage account to your ticker account, they will send you a $25 Amazon gift card. It may take a few weeks. I please don't email me saying I didn't get my ticker, my Amazon thing. It might take a month. All right, give them a minute.
But if it does take a minute, you definitely get with Spencer.
But people have emailed me or they've reached out to Benzinga. Like, "Hey, I didn't get my thing." I will connect you to them, no problem. But just give it a few weeks. So ticker.com/Benzinga, ticker with 2 I's. Zen Bullish with the reminder, as always, to hit the like button. Thank you very much. And I do see Gerald here. Michael,
Gerald Commissiong, the CEO of Todos Medical.
All right,
we ready?
I'm gonna step off, and let's get Gerald on here.
Thank you, Spencer. We're gonna bring on Gerald Commissiong, the CEO of Todos Medical. Gerald, how you doing?
I'm doing great. Thank you.
There we go. Now we can hear him. It sounds like you're doing well. There we go. Connection is good. Gerald, I have had the pleasure of speaking with you multiple times, actually, in the last month. We've been able to chat quite a bit, so it's good to have you back. It's Super Bowl weekend. Very exciting. What plans do you guys have? I heard that Todos actually has some pretty exciting stuff going on for the Super Bowl.
Yeah, we do. We do. Actually, I just had to fly back into New York today from an event we did yesterday. Celebrity golf tournament. We had a number of celebrities. It was great. We had Doug Flutie. There was Ed Reed. There was a number of people who were some big time former Hall of Famers, etc. Got to spend the day with John and Pete Nigerian too, which was pretty cool. So that was it was a good day yesterday. Really set the stage. I got to know a lot of people ahead of the celebrity event tomorrow, where there's going to be a lot of action, a lot of activity, and we're really promoting our Tolovid brand. This is really the kickoff and the launch, so it's exciting for us.
Awesome, man! Very exciting. Ed Reed, one of my all-time favorite football players, so very cool. So some good names in there, though. Very exciting. So let's break into what Todos is doing, right? Before we do that, actually, who's your pick for the Super Bowl? I gotta know.
I think the Rams are going to win.
Okay. All right. Well, we're Detroit fans, so we're sad Stafford left us, but you know what? I hope he gets a Super Bowl. Good for him. So we'll be watching that. But let's talk about Todos a little bit. You've been on All Access multiple times. I've gotten the chance to interview you several times as well. But for those of the audience that don't know, give us a brief overview of Todos, what you guys are working on, and what's been going on throughout the pandemic.
Sure. So Todos Medical is a Israeli diagnostics company. We've been historically focused on cancer. We got into COVID because we saw the need. And what we've been doing in COVID is we've been doing a ton of COVID testing at our lab in Atlanta, Georgia, and we've been building up a dietary supplement and the pharmaceutical botanical drug space. So we have 2 products really interesting. One's dietary supplement. It's the only 3CL protease inhibitor dietary supplement authorized by the FDA on the market. And that 3CL protease is also what our botanical drug targets. So the supplement you can get on Amazon. You can also get at mytolovid.com, which is the name of the product. The Tolovir drug, which is a related product, just finished phase 2 trials in Israel in hospitalized patients and showed a significant improvement, reduction of time in the hospital by over a week, improvement. Time to improvement was reduced by 3 days, so people got back to feeling normal and better faster. And obviously, there was reduction in death and reduction in intubation. So some very strong data, really going after the standard of care is remdesivir, and we did, our drug plus standard of care versus standard of care alone, and we saw what we saw was significant benefit from our drug. And so we're looking at different emergency use authorization pathways for ex-US and planning for US IND to be able to start trials here in the US. So very, very exciting time for us.
Yeah, absolutely. Let's talk a little bit more about the data too, right? I mean, compared to a control group with Tolovir, 0 mortality versus 22% in that control group. Can you talk to us about the efficacy, just some more of those results?
Sure. So one of the big things, that you see in these trials is really people dying when they're on drug. Unfortunately, a lot of trials have failed, including Paxlovid, not a Paxlovid, but an injectable form of Paxlovid from Pfizer. They just announced a couple of days ago that drug failed. And so there really isn't much in the hospital for these people. What we saw is when people were on our drug and they were taking it, they got better, they got stable. All 11 patients got better and got stable. Unfortunately, one of them passed, about a week and a half after they stopped taking our drug. And so what that tells us is when you're on our drug, you take dying off the table. In the control group, there were 3 deaths, including 2 during the study period, those first 10 days. So you saw that really significant reduction in mortality on the Tolovir side versus on the placebo side. So, taking death off the table is critical for the healthcare systems, for the payers being able to get people out of the hospital a week faster. That's really the money endpoint. Because, here in the U.S., it's 10,000, 20,000, 50,000, 100,000 a day, depending if you're where you are and if you're in the ICU. And so, being able to reduce that by 1 day is a big deal. Being able to reduce that by 7 days is a complete game changer. It's going to get people out of the hospital and get those hospitals from being full to, people coming in and going out so they can do their other surgeries, which is really what's needed. So it's a very, very exciting data for us. Really, we showed what we feel is superiority to remdesivir. It's a small sample size. We hear that. Everybody understands that. But the data is the data. And now we're moving on to that next phase. We think we could get EUA in some jurisdictions, and we're working on that now.
Got it. Okay, I'm going to pivot a little bit, understanding the data and some of the results that we've had. Let's talk about peers and comparable companies in the space, right? Market caps for other phase 3 COVID-19 companies. What are they like? What is the rest of the space like? Talk to me about some other people in this kind of sector.
Sure. So, what we've seen is phase 3 COVID-19 drugs. I guess before data, you saw Humanigen, which was up $500 million to $1 billion market cap. You saw Cytidine also in that $1 billion range. We obviously saw AVIR when they had their oral antiviral. They had a very significant market cap before their setback. You see Roche. You see obviously Pfizer and Merck, although those aren't really good comparables. But you do see Gilead. And I think Gilead, remdesivir, that's really the right comparison for our product because it's in the hospital setting, and that's really where remdesivir had almost all of its revenue. They did $6 billion in revenue last year. So our drug is better. We feel it's better as is. They're actually trying to make their drug an oral version to kind of compete with where we are now. And we all know that, injectable drugs, when you make them oral, they typically become less effective. So there's going to be some challenges around that, especially because remdesivir has some toxicity. So it really is looking like, Tolovir is stepping up to be in the right spot to be able to address the problems because everyone said Omicron was mild, and yet, 3,500 people are dying every day in the U.S. And so, it's one of these things where if there is another variant, which there almost certainly will be, and that variant escapes immunity, which it must if it's going to be a variant that ends up here, then the hospitals almost for certain will get full again, and you're going to need this in the surge. And even after the surges are gone, we see this long tail of death. So if we can help mitigate that, we think we can, add a lot to the U.S. healthcare system.
Yeah. Absolutely. And staying on the business side of it for a second, too, before we pivot and talk about the drug, the testing side of the business, right? The need for testing still growing exponentially, even more than it has since the beginning of the pandemic. Do you think that's going to be tailing away when you look at the testing and the need for it and the business case for the testing side? Or is that going to continue as we work through the pandemic here? Do you see that slackening off at all in the future?
Oh, I think quite obviously it's going higher. The administration is stepping in. They got faulted, during the Omicron surge for not having enough tests. Now there are tests, but still not enough. And the types of tests that people are using are so inaccurate that you have to use them over and over and over and over again, and you never really have a lot of confidence. So when I'm in a room and someone says, "Oh, I just tested negative by rapid," that doesn't make me warm and fuzzy. Certainly, I want to hear, I've tested negative by PCR. It's kind of just like when you hear, used to hear, "Oh, I'm vaccinated." That's great, and it's important, that protects you. With that said, it doesn't tell me that you might not have COVID and give it to me. So I think the reality is that people are realizing testing's here to stay, especially with these immune escape variants. They're figuring out how to do it. There's imperfect solutions with these rapid tests. PCR is going to continue to be the gold standard for people who really want to have accurate, safe places. And we see that being institutionalized, like we talked about last year. It's happening now. Offices, certainly like meatpacking places, different places of work. Travel, obviously, many places are still demanding PCR, not antigen. And so, we see the demand continuing to go higher, not by government mandate, but simply by virtue of the fact that people want to know, because they don't want their workforce getting infected and potentially ending up with long COVID, which means that they could be out on disability for a long time. So that's continuing to go higher. And then ultimately our Toto test, which could, replace or add to these rapids by giving them a lot of sensitivity, that's clear that it's becoming a more important asset. We're going to start, moving that forward in a bigger way very soon.
Got it. Okay, so let's pivot then and talk a little bit more about the drug, right? Looking at this, it seems like the drug should be easy to license, right? But what type of drug companies are going to want this asset? Who are the most logical suitors? Who's the best use case for this when it comes to the clients and the companies?
Well, as I said, the people that are in dealing with the hospitals, because that's where the bulk of the data is. Not that this can't work outside the hospital. We do think it will, but we have most of our clinical trial data in the hospital. So there, I can't speculate as to which companies, but as I mentioned, Remdesivir, Gilead, certainly their franchise and where they are in the hospital and treating COVID-19 patients, that kind of product is the way to go. Obviously, we see other drugs like dexamethasone and other things being used, but really that's where it is. So I think, anybody, either Gilead or looking to compete with Gilead to get into that hospital market and deal with these infectious disease patients, that's the obvious suitor. But of course, there are many other companies that provide products into the hospital, that have sales channels into the hospital. And on an emergency use basis, what you have to remember is that the government's the direct buyer, and then the government distributes. The good thing about our product is it's really easy to stockpile. You don't have these crazy, very short expiration dates. You don't have temperatures that it has to be kept at in some, very cold. So for us, they're bottles, you put them in, you keep them on the shelf, and then you take them off and you give them to people when you need them. We think that provides a big advantage for stockpiling that some of these other monoclonal antibodies or drugs like remdesivir that are IV don't have.
Got it. Okay, so that's actually a good segue to talk about what's coming next, right? The talk of the town right now really is how a lot of people are expecting the Delta variant to hit the unvaccinated population pretty hard this season. Looking at that, talk about the situation as a whole, right? Biden's goal of 70% vaccination. Are we going to hit that? Are we falling short? Let's talk a little bit about why this is so necessary, as the Delta variant is expected to slam, more than likely, as a lot of medical experts are saying, the unvaccinated population.
Yeah, it's actually interesting that you mentioned the Delta, because it's quite possible it's not completely gone. With that said, what we think is going to happen is obviously there's going to be another round of this, and the need for this product in the hospital is just going to go higher. So, as you asked the question, hey, how do we see things pivoting from here? The reality is we've come to accept, hundreds of thousands of cases a day. We've come to accept thousands of deaths. But I don't think that is really something that we truly accept. It's something that we've been tuning out from. The problem that we foresee is that the next variant, when you talk about the unvaccinated, a lot of the resources that we've been using have been going towards the unvaccinated. And that's going to continue to be the case. And the problem really, you say 70% are vaccinated, but many of those people are becoming unvaccinated. Their immunity is waning, or they think that they have immunity when they don't, or they took an extra booster dose and it didn't work and they don't know it. So when we say, immunity, every day that goes on from a high level of immunity, you become less and less immune. And the challenge right now is that we have no real idea where we are from an immunity perspective, like almost none. So what we need to do is we need to start really ramping up our neutralizing antibody testing to see where people are in the cycle. With so much Omicron running around, a lot of people did interact with the spike protein again. A lot of people may have increased their neutralizing antibodies, but what we're learning is a lot of people are getting reinfected, including people who are vaccinated and boosted, getting Omicron twice. And we need to see why that is. Have they had some kind of immune injury that is causing them to be unable to respond the second go round? And we're seeing now this, Omicron 2 show up and start to really take over. In Denmark, it's the large percentage of the population. South Africa, it's a large percentage of the population. Now, in the US, it doesn't look that high. And hopefully in some of those other jurisdictions, hospitalizations didn't go up. But it's clear the makeup of the US is different than other places. And so we think that, the question of, vaccinated versus unvaccinated, that's becoming less important every day, because even if you've been vaccinated, that immunity is not as strong as we once thought it was. It's very important. It's important to have, but more and more people are still moving in the direction of losing their immunity and ending up in the hospital. So having new treatments to help those people get out of the hospital faster, to leave capacity, is the key.
Got it. Okay, so we talked a lot about the immunity, the vaccinations wearing off and stuff like that. Let's pivot just a little bit and talk about the Toto test, which actually had some really good data too. But that can register active infection 1 to 3 days after infection. So if people had an earlier test for diagnosis, something they could do at home, theoretically that could really slow down the contagion. What's the plan for the Toto test?
Right. So the plan for the Toto test is now we're going to be investing in the prototype. So we have the raw data with the test in the lab at the hospital, and that was very, very good. So we think that is, kind of commercial product number one. Start monitoring viral loads in a much more efficient and robust way at the hospital, and finding people who went into the hospital not for COVID, that if they do get COVID, finding them out very early so you can start to intervene earlier. Because, if you went into the hospital not for COVID, you likely have some risk factor because you're in the hospital. And so then once you get COVID, then you do become one of those very high at risk people. And so that is a population that we're seeing more and more as daily stuff is going on, and you're starting to get more procedures. More and more people are going in and getting COVID as a result of being in the hospital, as opposed to coming in with COVID. So that is, that works both ways in terms of that aspect of it. So that's step one that we think is going to be really important. The next things that we think are going to be really important in that setting are really moving the ball down the field in terms of not just, the level of immunity or where you are with immunity, et cetera, but getting the hospital settings to be educated about what can be done with the new products. So there's something that's going to be going, we think pretty soon. There's going to start to be a shift because hospital workers and doctors are obviously very tired of having to deal with all of these patients that are taking up a lot of their resources and time in the hospital. And they're going to be demanding new products. And that's where we think we could have an impact both with our Toto test and our Tolovir drug diagnostic combination. In terms of the at-home for Toto test, we think probably 3 to 6 months from now, we'll have the prototypes be able to start rolling them out, as well as the mass distribution Toto test.
Got it. Okay, so you started us off there. I want to start to close and wrap things out by talking about the future for you guys, right? We've talked about a lot of data, a lot of the current situation with COVID, right? But let's start to talk about Todos. What should we be on the lookout for from you guys the rest of Q1, moving into the rest of the year? And what's on the roadmap for you guys' priorities? You guys have a lot of balls in the air, but what's real priority for you?
Yeah, so in terms of pinning down what we're doing, because we do a lot, but we got to distill it, okay? All of the 3CL biology-related work, so Toto test, Tolovir, Tolovid, Tolovid Daily, that's all going into a subsidiary, majority owned by us, that we're in the process of closing a joint venture with NLC Pharma. Okay, that's going to be self-financed. So the phase 3 and the commercialization, all that's all going off into a separate entity that will have the revenue base of the Tolavid with it. So it'll be revenue and the development going with it, to sustain growth. That will take the capital raise pressure off of the parent company, because that will go off and raise its own capital. Okay, then Todos, the parent, is going back to refocus on the core business, which is testing at our lab in Georgia, PCR testing, ramping that up, continuing to ramp that up, continuing to add complementary tests so we can get more dollars per patient as we better service the entire patient, rolling out the neutralizing antibody testing, and then targeting all of that in the areas towards our proprietary tests that are going to be coming out in the market about a year from now. Those are really our cancer tests and breast cancer tests, especially Videssa. So, as time goes on, obviously there's a lot of interest in Tolatest, Tolavir, and Tolavid. We're wrapping up the deal to own all the assets, consolidate it, and get it ready to do its own capital raise in Q2. So we're seeding it right now and doing its own capital raise in Q2 to fund that phase 3. And that money's not going to come at expense to Todos shareholders, right? And then Todos is going to keep its revenue-producing business on the PCR side, on the distribution side, grow that, and then layer in our Videssa test towards the end of this year, early next year. And that's really where we see, potentially huge movement because that's a proprietary test that we expect will do $75 million in revenue between 2023 and 2024.
Got it. All right, I hope everyone was taking notes. It's a lot to keep track of. It's going to be a busy 2022 for you guys, no doubt. Before I bring on my pal, Spencer Israel, and get ready to transition, I want to circle back to where we started, this celebrity football tournament this weekend. I think it's a really, really cool initiative. What message are you guys looking to drive home with this? What is this supposed to accomplish?
Well, the number one message is that there is a new tool to help you support your immune system when you're out and on the go, especially in a sports setting. We want you to stay in the game. That's the objective. So Tolavid is really an immune support supplement. It stops the 3CL protease. That's going to be our marketing tool and really explaining how the 3CL protease works. We're going to point at Pfizer's Paxlovid and some of the data that they showed to say, hey, this is something you want in your system. So the big time launch of Tolavid is what this weekend is about, and it's about helping people stay in the game. After that, whether it's stay in the game in sports, stay in the game in the office, stay in the game in school, that's what it's about, helping people keep their active lives.
Awesome. Love that. Gerald, every time you come on, you've got interesting insights and always a lot to keep an eye out for in the future, too. Enjoy the Super Bowl weekend. Have fun. We'll talk to you soon. Thanks, Gerald.
All right. Thank you very much.
Take care. All right, Spencer.
Yo, swaggiest guest today, maybe?
You like that? You like that suit combination?
Yeah,
I like it.
Yeah,
Sharp.
definitely. I definitely could not pull that off. So props to Gerald for pulling that off.
Man. I have literally 2 shades of gray on because
wait a minute. Did you found the jacket? Or is
no, this is different gray jacket. I had my favorite blazer in the entire world that I kept in the office for months. I am now down. I have a different gray jacket. That's the one I'm wearing. I can't find the other one. So it's blazer shopping for me. This weekend.
I'll keep an eye out for your blazer if I see it.
Thanks, man.
Thank you so much, Michael Murray, for stepping in for me today. I appreciate you. Taco for you. Taco for
always. You. Oh, thanks, Spencer.
Well, I may have just used up all my tacos, but I'll wait till they reset and then I'll give you another taco. Thanks a lot, Michael Murray.
Thank you, Spencer.
All right, we got to end this show because Benzinga Live is supposed to be on right now, and so they're gonna transition over to Benzinga Live on that studio desk right there. So, man, what a morning! Thank you all so much for bearing with me. Hey, listen, some days it all works. Some days the gremlins are in the air. Man, you guys, anyone that's been watching us for years, if you're a pre-market prep viewer / listener. Like 4 years ago, you remember the gremlins were frequent. It was almost comical. So we've mostly moved past them, but hey, every now and again it happens. I want to again mention the sponsor of today's show, Ticker. There's my hat. I don't know. I look so stupid wearing this with the headphones, but here we are, ticker.com/Benzinga. Where's that commercial at? Let's play my Ticker commercial. Do we even have it? I don't even know if we have it in here because we call it an audible. No, I don't think we do. Ticker.com/Benzinga. Click the link. Get create an account, connect your brokerage. Tell them you're from Benzinga. Get Amazon gift card. It's that simple. Thank you to all of our speakers today. Gosh. Thank you, Happy. Thank you, Happy. What else do we have? Tom from MySpace? Tom, is that you? Tom, where you been for the last 17 years? Man, welcome. Holy cow. All right. I'm going to wrap because Benzinga Live is going live with Aaron Bree. We got Tim Quast on the show today. We have, if you guys need to know about charts, we have maybe one of my personal favorite chart people on the show today, Alex Cole from Go No Go. This guy literally, he writes the curriculum for the CMT, not like the whole curriculum, but part of the curriculum for the CMT exam. This guy literally writes the curriculum on charting and technical analysis. So super excited for that. We'll have Tony Benson on the show. Hey, we're going to talk about how to find winning stocks. Not winning. I shouldn't say winning. How to find hot stocks. That's the theme of today's show. So without further ado, I am going to head on over to that show with Aaron Bree. Thanks to you all for watching. And that's all I have to say. Oh, Zen Bullish, you know it? Awesome. You know Go No Go? I like Go No Go because it's very simple, right? It's like, hey, here's a setup. Do you go or do you no go? Tom, I'm so glad you can join us today. So without further ado, please hit that like button. I appreciate the likes. And PSA, if you see anybody posing as Benzinga in the wild, please email us, okay? If you see a fake Benzinga, email us at scamreports@benzinga.com. If you have any feedback, anything you liked, anything you didn't like, good, bad, otherwise, email us, shows@benzinga.com. And hey, check out Benzinga Pro while you're at it. Free 2-week trial, pro.benzinga.com. If you click on the link that's on the screen there, I'll put it in the chat. Here, I'll put it in the chat 1 second. It'll give you 25% off your Benzinga Pro subscription. There, it's in the chat right there. Check it out. All right, I'm hopping off. Benzinga Live is going live. This stream will end and redirect to that. So everyone, I will catch you over there with Aaron Bree. And market's still up, so I'm still happy. Everyone have a great rest of your day. We'll see you over on Benzinga Live as soon as I figure out how to end this stream. There we go.